YouTube. Hi. So we are now recording. We're now live. We're now going to get started. I wanted to introduce you first to our Director of Accounting Services who joined us in April. Her name is Erin Goodson, and she's a CPA. Has multiple years in an audit as an auditor and a finance director, and then also has taught at the university level. So she's actually the one that created this fabulous PowerPoint slide for us. And so she and I are going to kind of split the presentation together today. And then this is the agenda in front of us that we have. And we're going to try and stick as closely to it. It's a pretty aggressive agenda, so it may go quickly, but we are going to send the slides to all of you at the end of the presentation. Okay, so with that, Erin, I'm going to have you take it away with our first topic of budgets.
Right, we're going to talk about budgets. And so nice to meet everybody. Nice to see everybody too. Glad you could join us this morning. So we're going to start it off with budgets. And I know that may not be everyone's favorite lunchtime topic to start off with, but they are necessary. They're a fundamental tool that can really help you manage your company's growth and help ensure that your company is headed in the direction that you want it to be. And so a budget is going to let you look at your income and your expenses. It can help you plan for anticipated costs, and you can look at how I'm growing in the future. Do I need to hire additional employees? Do I have the resources to hire additional employees? So lots of benefits to budgeting. And some major things you want to consider when you're going through creating a budget for the year is you want to think about your overall expenses. What expenses did I incur in the prior year? Do I have a regular payroll? That will include everyone at the organization, including if the owner has draws as well. So make sure you're thinking about payroll and future hires as well. Are you expanding benefits in the upcoming year? You'd like to include that. Make sure you think about what rent costs you might have, from if it's equipment leasing to the building leasing itself, the office space you're in. Think about utilities. So what electrical, what phone, internet, water bills you have coming in on a monthly basis, and can you estimate those? I'm in North Carolina, and so right now it is 56 degrees, which was much warmer than yesterday. So I know for budgeting purposes, the cooler months, I'm going to budget for additional energy expenses. You want to think about insurance costs. If it's general liability insurance, if it's payroll related insurance, like your unemployment insurance or workers' compensation insurance. You want to consider what professional services you've used in the past and what you'll continue to use going forward. So those tax accountants, the IT services you use. Consider advertising. Advertising is a common business expense. You need it to increase brand awareness for your company. What advertising, what marketing efforts are you going to go forward with in the next fiscal year, and budget for that as well? Think about if you've got any existing loans as you're growing your business. You might have borrowed to ensure that you've had the capital you needed to grow that business. So when are those obligations going to become due, and make sure you've got that included in your budget. So those are just some overall expenses that you want to think through when you're planning for the next year and your bottom line. And those are the expense side. You want to think about your revenue side, right? Good starting point is your growth measures. How have you been growing? Can you base it on the prior year? And then target upwards, right? Set yourself some room to increase revenue numbers as you expect, depending on what efforts you're going to place there. And we know we all want to continue to grow. So look at your increases for the revenue side, your customers coming in. Are those marketing efforts going to pay off on the revenue side and hopefully increase your gross profit numbers as well? So overall, your budget can really help you make decisions as a business owner, and then you can review the performance of your organization, your company, and continue to push growth in the future. Okay, so now I'll turn it over to Katie to talk about setting some business goals and smart saving goals.
Yes. So right now, Lilyfield is in the process of doing our 2024 budget. And so the way that I personally start the budgeting process is I do exactly what Erin said. I look at how much have we grown. Just a sec. I look at how much have we grown in the past, which has averaged about 20% every year, knock on wood. And then I use that number to estimate, okay, if I stay on the 20% trend, my revenue should be this year. And then I can do my expenses based on that. But it's really about setting that target. That's so important. It's as though, and I'm gonna get a little woo-woo here, but it's as though when you tell the universe, hey, I want to make $1 million in revenue this year, the universe is like, all right, let's do it. And forces start to move in that direction. But if you don't set that target to begin with, you're like I read this somewhere, you're like a ship on the ocean, just kind of floating along, like, I'll go wherever you take me. But when you set that intention, I want to make $1 million in sales, it's almost like you've created a lighthouse, and now you can steer your boat towards that lighthouse or towards that goal, as opposed to just being out there like, woo. So that's really the reason. It's almost magic. I would really encourage all of you guys to maybe try it for 2024. There's different ways you can do it. You can have a revenue target. So you look at last year's revenue and say, oh, I want to make it, I made 750,000 last year. I want to make 800,000 this year. I made 1 million last year. I want to make 1.5 million this year, and set that intention. Or you could do a percent growth. I want to grow by 15% this year. So you really want to set those business goals. And of course, we talk about the SMART goals. Just a reminder, those are specific, measurable, attainable, realistic, and timely. So you don't want to be, if you made $1 million this year, is a $5 million revenue goal really attainable? I don't know, maybe. So you just want to make sure that they're reasonable, or else you're going to just kind of give up and be like, oh, whatever. And so then you're going to, based on that, of course, create your budget, forecast what your future revenues will be, forecast what your future expenses will be. Now, I did want to talk a little bit when you're doing this budget. So we've all been told by the media that, a recession is coming, inflation is high. So we want to make sure that we are kind of building in a cushion for that, so that we're not approaching a possible recession or inflation from a place of fear. We are coming from a place of adaptability and flexibility, right? Our business, we want to create businesses that are going to be adaptable and flexible to those market changes, because we all know the majority of us on this call have been around, in the business world 20 plus years, and we know markets go like this, right? So we want to kind of build in a cushion so that those times don't stress us out when the mass hysteria hits of, recession's coming, or it's an election year, or all that. So what I wanted to talk about a little bit too is setting your savings goals, because this is what's going to give you kind of peace of mind to ride those waves. And I believe this year we offered this as a service to help everybody decide or to come up with their savings goals. And that's something that all of the bookkeepers and all of the managers have been trained on, that we can look at your books and help you come up with your savings goal. So if that's something that you're interested in finding out or learning about this year, just reach out to your bookkeeper or your manager. We'll be happy to sit down with you and go over that. We use one of two methodologies. The first one is to look at what your dad's always said, 3 months worth of emergency savings in your, savings account. So you want to look at, do I have 1 month's worth of expenses, 2 months or 3 months worth of expenses in my checking account? And you determine whether you need 1 month's worth or 3 months worth based on how risky your business is. So if your business is very reactive to the market, it may be a little bit more risky, whereas I consider Lilyfield somewhat low risk because everyone's going to need a bookkeeper. So I can go on the lower side. But think about, like, okay, if another pandemic hit, what happens to my company? Did my company explode during the pandemic, or did my company not do so great during the pandemic? And that's going to help you determine what your risk level is. So that's the one method. The other is to look at 12 months of revenue and come up with either 10, 20, or 30% of total revenue as your savings goal, again, based on your level of risk and what would make you feel good. And remember, you want the savings to be above and beyond. You don't want the savings to be what you're going to poach for your taxes, right? Because then you're just pay your taxes and now your savings is back down to zero, right? You want this above and beyond what you've got to pay for taxes. Okay. So we're going to go to the next slide. And we're going to talk just briefly about getting those final W9s from all the vendors. The majority of our callers or our meeting people are our clients, not all of them, but the majority of them are. And so they've heard us, their bookkeepers saying, I need a W9, I need a W9 for this vendor throughout the year. And if you haven't done that, you're going to hear more from them in the month of December, because they want to have all those W9s on file January 1. So that's not holding them up in processing your year end. But I just want to really briefly touch on, the why, because that's really what we get, especially with new clients, is why do I have to get a W9? I don't understand. And so the why really stems from the IRS. Okay. So the IRS has created this system to identify folks out there that are operating under the radar and not reporting their income. Okay. So that's really the why of it. And so we are looking for folks that are that have services, and they're either a sole proprietor, a single member LLC, or a partnership. And that's what we're looking for. And we don't necessarily know whether a company is one of those without getting this W9. Okay. So we're going to go through, who do you have to get it from? So you always, always, always have to get one from an attorney, no matter what. So that's just easy. If you're stroking a check to an attorney, you ask them for a W9 and they'll shoot it over to you super fast because they know. Okay. Second, if you're paying rent of office space, you need a W9 unless you can clearly see the landlord is incorporated. So if it's Talcor, Inc., it's incorporated, you don't need to get a W9 for them. But if it's John Smith's Properties, we have no idea what their business is, if it's an S Corp or if it's a sole proprietor. So that's why your bookkeeper is going to reach out and say, hey, I need a W9 because I have no idea. And the next one is going to be your non-employee compensation. So these are the folks I was just mentioning, the service providers. Okay, so you don't have to get one from Target. Okay, we know they're corporate. But if you have Sally Smith's cleaning services, we're probably going to need one from her just to find out whether or not she's operating as a sole proprietor or if she's at the S Corp level. So these vendors are usually coded to contract labor, contractors, repairs and maintenance, commissions, referral fees, professional fees, or depending on your business, they may be very specific, like a coach or an instructor. So someone that is not an employee, but they're providing services for your business. If you know that vendor, maybe on their invoice, it says INC Inc. or PA or LTD at the end of their name, you're good. We don't need to get a W9 for them at all. You don't have to worry about it. Except attorneys. Attorneys, it doesn't matter. Always get one for an attorney. Okay. So this is just a slide real briefly of what is you're actually looking for or what your bookkeeper is looking for. We've got to put these 4 items into QuickBooks in order to generate your 1099 through the system. So we've got to pull these numbers, and the only way to get them, of course, is to get that W9. Okay, so just a reminder that we can hound you as much as we want. But ultimately, it is the business owner's responsibility to issue 1099s. We're trying to make it as easy as possible for you. But if you ultimately don't obtain that for us, you will get an email from us saying that in our professional opinion, this person may have needed a 1099, but we couldn't tell. You'll get that from us. The best practice, though, is to just be super proactive about it. If you think a vendor is going to need a 1099 at the end of the year, go ahead and get that. Ask them to fill out that W9 before you ever stroke them a check. Because you're the business owner. You're the one that's paying them. They're waiting for the money. So you've got the power. So you just say, fill this W9 out and I'll hand you your check. That's actually the best practice that we counsel our clients to try and do. Okay.
Okay, so
that's
now
everything.
You've got the W9, you've saved it. How long do you have to hang on to that W9? Let's talk record retention. So IRS documents like a W9, legal documents, bank statements, employee documents, pay stubs, all those documents. How long do you really need to hang on to those documents from a legal and an IRS perspective? Well, luckily, we're in a day of electronic documents, but of course, with electronic documents comes storage issues as well. So our best practiced rule of thumb is to think about, is the document a permanent document? Is it a corporate record? Like, is it something from a ruling from a tax authority? Is it your general ledger? Is it an article of incorporation for your business? Those are corporate records, and those you're going to want to hang on to indefinitely. If it is a bank statement, an employee record, a contract or an agreement, a tax record, the best rule of thumb is to hang on to it for a minimum of 7 years. So the IRS does a look back, and generally the safest documentation purpose is to hold on to it for 7 years, so that if they come calling saying you're undergoing an audit, you've got the support to appeal whatever they're questioning about. So 7 years rule of thumb for all documents except for corporate records, which we would advise to hang on to indefinitely. Okay. And let's talk about something else at your end that is a good practice to go ahead and you really want to go through these throughout the year. But if you haven't done it throughout the year, make sure before the year ends, you're taking a look at employee assessments. So employee assessments can really help your employees, ensuring that you've provided feedback so that they can do the job you hired them to do. So it'll help you as a business owner aid in promotion decisions. It can help you see if you need to provide some training to your associates, your employees. You can figure out if you need to provide extra motivation for employees as well through employee assessment. So you want to be consistent throughout the year in providing feedback to employees, but the end of the year is a good time to make that formal documentation of an employee assessment. You want to start with looking at the employee's job description. That's what you hired them to do. And so you can use that as a measure of how you will assess the employee. You want to make sure you're using a structured format that's consistent, and you want to ensure that you've got that consistency so that you're fair amongst all your employees. And you're not just looking for areas of improvements. This is a good opportunity to identify areas of improvements for your employees, but you also want to highlight your employees' strengths. You hired them for a reason. They brought skills to the table. Make sure that you are focusing on what they do well. And you also have the opportunity to ask for specific feedback from your employees as well. So encourage them to tell you about parts of their role that they enjoy the most, and where could they potentially expand. Encourage them to talk about areas where they see opportunities for efficiency or improvements themselves. It might be hard for them to really do a judgment on themselves, right? Not willing to talk as much if they're doing a good job or the area of an improvement. So when you're having the assessment or the meeting to discuss the assessment, make sure you're asking just open-ended questions. What do you like most about your role? Tell me about your typical day, so you can get that conversation flowing from the employees. So encourage that self-reflection. And then, like I said, the beginning of our review, make sure that you're following up, right? So you're providing the ongoing support for your employees so that you can monitor growth and you can see if there was an area for improvement, that you've provided the training they need, they're back on track and continuing to bring success to your business. Okay, so along with employees, you also want to take a look at your vendors. So Katie's going to talk about updating vendor lists and relationships.
Okay, so just you want, especially your big vendors, those are the ones that you just want to look at and just make sure, do I have the current address? Do my phone numbers current? Do I have everything that I need for that vendor? And am I getting the best deals from that particular vendor, or do I need to reach out to do a renegotiation? So that may be looking at how much you spent on that vendor, maybe for the last 3 years, and determining a percent increase that you've been doing, that you can actually sit down and say, look, we've grown with you this much, we've provided you this much money, in this much, these many orders, or what have you. What can we look at to lock in maybe some pricing for the new year? And then looking at existing contracts, making sure you have a schedule so when contracts are expiring, so you can stay proactive on top of those. So nothing goes to something month to month that's going to be costing you more than necessary. And then just looking at, let's go ahead and go to the scorecard. So there's this scorecard that you could also do for each of your big vendors, where, what's the quality, how reliable are they timely, cost and pricing, and you could fill this out, and depending on the relationship you have with that particular vendor, send it to them as a conversation piece, like, hey, filled this out today, would love to chat more about it. Do you have time before the end of the year? For a lot of businesses, right now things tend to slow down as everybody's getting ready for the holidays. I know that's not the case for everybody. But for the folks that it is, this can be a good time to just kind of look at those vendor relationships again. Okay. So the last topic, and I think we're doing okay on time, we've got 4 minutes. For my folks that aren't clients of ours, the bookkeepers at Lilyfield, if they come across some type of transaction that they're not sure how to code, we direct them to code it to an account called Ask My Client, or the AMC. That's the Lilyfield lingo, the AMC. So we will code things to the Ask My Client, and then the bookkeeper will send that list to one of you guys, asking you where should that be coded. And this is usually your new vendors, like vendors the bookkeeper's never seen before, or it's your Amazon, Targets, Walmarts that were like, oh, that could be personal, I'm not 100% sure. So best practice on the Ask My Client, of course, is to get that on a monthly basis. Some we do weekly, if depending on the volume of transactions and the relationship between the owner and the bookkeeper. But for the most part, most of our clients receive this report on a monthly basis, because we want to keep it timely so that you can remember what those expenses were. If you're doing your Ask My Client 5 months later, you're like, Target, $17 back in February. No idea what that is, right? So that's why you want to stay on top of those items. So we just really want to encourage, and your bookkeeper is going to be asking you, especially as they're going towards the year end, because their managers are going to be hounding them. You need to get the Ask My Client coded. So just be aware of that you're kind of holding up the bookkeeper. which then in turn holds up the year end, because we can't close and get the books over to your tax accountant until you've told us how to code these. And worst case scenario, we're going to code them to the draw or the distribution account because you never told us it was a business expense to begin with. So that's just the last piece of the puzzle for us before we can get everything over to your tax accountant. Okay, so 2 minutes to spare. If anyone needs or wants any help implementing any of the topics we talked about today, just reach out to your bookkeeper, your manager, Aaron, or me. We'd be happy to schedule some time with you to walk you through it or to give you some more clarification. Again, these are the items, a lot of these items that we mentioned, the W9s, the Ask My Client, are things that we need to have done by the end of the year so that we can close your books and get them over to your tax accountant. We personally at Lilyfield have a goal of getting the books to all tax accountants by February 15th. So if you are a late filer, an October filer, that's because of you. It's not because of us. So, and we just don't believe in kicking the can down the road in doing a September, October filing, because a lot of times I've had the experience where I have clients that owe tens of thousands of dollars and they find out in October and they're 10 months into the year and they're probably going to owe another 10 to 20,000 the following year because they haven't done any tax planning. So you really we do our best to get those books over to your tax accountant so you can have a tax return done March and April so that you can then tax plan and you've still got, 8-9 months left in the year to be mindful of what you need to do for that tax planning. So that's really why we wanted to kind of do this year-end review for you guys. If you want, let's go to the next screen, Aaron. I'm just going to mention this real briefly before we start questions. We are going to be sending you a survey, and the survey is going to have 4 questions, 4 easy questions. One of which is just going to be, what kind of webinars would you like to see in the future? What kind of topics would you love for us to cover? Think about the things that you're just like, I don't really get it. I don't understand. I don't want to ask my tax accountant. Those are the kind of topics that we would love to share with you this year. And we will definitely take your feedback because we haven't set the agenda yet, because we want to hear back from you guys first. We're also going to give you a free gift, 2 free gifts. We started creating documents called field notes for Lilyfield field notes. One's going to be all about W9s. So it's going to be like 3-page document about W9s if you're so inclined to read about it. The other is going to be a record retention, and Aaron's put together multi-page list of every type of possible document you may be holding on to in your office and the recommended time to keep those. So you'll get a record retention and W9 document and copies of these slides. And we just ask that you do the real quick 4-question survey for us. That would be awesome. So I went 1 minute over, so that's pretty good. Aaron, I'm pretty impressed. Yeah, we did it. Okay. So thank you to everyone who attended. If you have questions, we will take those at this time. You can use the chat feature down at the bottom, and we'll be happy to answer any questions you may have. So maybe we just covered it all, Aaron. Okay, so we had someone ask, are you all offering accounting services as well now? So we do bookkeeping and accounting services. The only thing we don't do is taxes. We do not file tax returns, but we will be rolling out CFO services in the next year. So kind of a CFO to go, or they call it a fractional CFO. With Erin coming on board with her CPA background, that is definitely something that we'll start offering this year. And let me know if that didn't answer your question.
What would that
Can I
entail?
just unmute? That does sound, sorry, but I just like the CFO to go sounds really interesting. Is that anything you could like talk a little bit about? Obviously, it's not something you guys are like offering right now, but is that something you can tease?
Yeah, absolutely. So it's going to include things like cash flow analysis, projections, helping you out with your budgets, like actually coming up with your budget for you. We will do like, is it time to hire? So like a lot of times people don't know, like, do I have the capacity to hire, especially if you're hiring a mid-tier manager? A lot of times that, that comes without the production behind it, because it's really just a manager person. Build versus rent. So we've got clients that maybe want to buy a building or build a building. We can run those type of analysis. So it's really more of like high level analysis that you don't necessarily need or want to have your tax accountant, pay the tax accountant to do. That's something we can definitely do for you, especially since we're the ones in your books all the time and familiar with your account. Great question. Any others?
Do we need W-9s for individuals who do not have a business?
Yes, if you are paying them to do something in your business, the answer is yes. Now, one thing I just realized, Erin, that we didn't have on our slides is the $600 limit.
Mm-hmm.
So if you're paying your friend's son down the street to do some filing of receipts for you at the end of the year, and it's like $100 under the table, you're good to go. Don't worry about it. But if it is same thing, somebody coming in, excuse me, once a month to file receipts for you, and it's your friend's son down the street, and they're getting paid $100 a month, it's gonna be $1,200 by the end of the year. Yes, they will need a W-9, and you will issue a 1099 to them at the end of the year based on their social security number. Any others? All right. Going, gone. All right. Well, if anyone's being shy because they don't want everyone on the webinar to see their questions, reach out to Erin or myself via email, and we'll be happy to answer any questions you may have regarding year end. And we thank all of you for being here today and taking time out for lunch, and hope you have a great rest of your week.
Thank you.
Thank you.
Bye.